The following is a presentation of TFNN.
Next up, we're going to go to Florida, Titusville. Nick, thanks for hanging on the line. How you doing today?
Hi, yourself, sir?
I'm doing well.
Ken, I want to say I'm 84 years old, and the way you explain things makes it very easy to follow.
That's very nice of you to say, Nick. I appreciate that very much.
Have a good day, sir.
All right, you too.
Live at TFNN. Breakout Investing with your host, Ken Shreve.
Good afternoon, everyone. Happy Wednesday. Welcome to another edition of Breakout Investing on TFNN. Been a little while since I've been on the air, enjoying the holidays with the family. Hope you're having a great holiday season as well. Happy New Year. What is it, 3 or 4 trading days left? I think, including today, 4 trading days left in 2012. So hopefully the first part of 2013 will see more money come in from the sidelines. Still a lot of uncertainty out there, though. And why don't we check in on the markets here? But before we do that, let me remind you of the phone number that you can use to talk to me. That number is 877-927-6648. 877-927-6648. You can catch my show every day, 3 to 4 Eastern on TFNN. You can also pick it up as a podcast on iTunes if you can't listen live. And don't forget, you can listen to all TFNN programming on your smartphone. That's very easy to do. Open your smartphone browser, type in tfnn.mobi. You can listen to the stream that way as well. And if you want to look at charts live right along with me, you can do that with Tiger TV on the homepage of TFNN.com. If you're listening at your PC, the show is carried live on Channel 1. It is archived on Channel 13. And if you want to look at Tiger TV on your handheld device, that's easy to do. Just open your smartphone browser, type in TFNN.com, and then over on the right-hand side of the homepage, you'll see some cell phones there, and just click that box, and it'll recognize your device and start streaming on your cell phones. That's a pretty cool feature. All right, let's take a look at the NASDAQ composite here. You know, for those of us expecting a quiet day of trading Wednesday, Thursday, and Friday, well, we had another thing coming because there's quite a bit of selling and a lot of growth stocks in my screens today. We'll get into the reason why in just a moment, but take a look at the NASDAQ composite. It's trying to fight off its intraday low of 29.83. It is holding support so far at 29.84. It just fell a little bit below that, but just about a point or so. Right now, the NASDAQ composite is at 2,997, about 3 points underneath that 3,000 level. Down about 0.5% on the day, but you can see the support here that we're talking about for the tech index and the S&P 500. See what the benchmark index is up to, holding above its 50-day moving average here, trading right in the middle half of its range today, down only 4 points now, 0.3% decline for the S&P 500 to 1422. Its 50-day moving average is at 1413. That's the S&P 500. And then taking a look at the Dow Jones Industrial Average, it touched its 50-day moving average at 13,083 today. Basically hit an intraday low of 13,076, so fell below it by about 5 or 6 points. Last trading at 13,130, only down 8.5 points on the day. So selling pretty tame in the Dow today. Volume, we're comparing Monday against volume today against Monday's levels. Monday we only had 617 million shares trade on the NASDAQ composite. Looks like we're trading a little bit higher than that today, but in general a low volume session. NYSE volume 286 million shares on Monday. Remember, Monday was just a half day of trading. I think we're tracking pretty close to that, maybe a little bit lower. So we'll try to get a better read on that as the session progresses, but likely low volume in the market between now and the end of the week. Bond yields down slightly. 10-year note at 1.76%, 30-year bond at 2.93%. Dollar virtually unchanged today down just a little bit to 79.63. February gold, not much movement in gold today, up a little bit, $1.20 gain, 0.1% to $1,660.70 an ounce. Oil ends at $90.98 a barrel, up more than 2% on the day. There's talk that President Obama is going to cut his vacation short in Hawaii. Let Americans know that he's serious about fixing the fiscal cliff debacle. Not looking likely we're going to get any sort of deal before the end of the year. Market probably a little jittery about that, but the market is most jittery today about what looks to be a pretty disappointing retail sales or holiday shopping season, I should say. Remember, Thanksgiving was not that long ago. The headlines after Black Friday and then Cyber Monday and the weekend just after Black Friday, holiday season got off to a booming start. All of a sudden, there's a lot of optimism that consumers still hanging in there. We're going to get pretty good retail sales. But what looks like happened after a strong start on Black Friday and Cyber Monday, it just hit a wall, and it started obviously to pick up as Christmas approached, the week before Christmas, but MasterCard came out with a research report today, specifically the MasterCard Spending Pulse report, said that holiday spending growth was up a scant 0.7% from a year ago, smallest increase since 2008, and well below the 3 to 4% gain that was expected by economists. So it's looking like retail sales are going to be on the soft side, and if that's the case, well, maybe we know why Apple has been under so much pressure. Is it in anticipation of an earnings report that may not be up to snuff in January? You see Apple's downtrend is firmly intact here. It's down another 1.1% today to $514.56. So Apple under pressure. That 500 level is certainly the psychological level now for Apple. But by and large today, that retail data from MasterCard really spooked the market. There's a very liquid ETF that tracks the retailers. This is the Spider S&P Retail Index. You can see the big downward move it's making today. This is a fund that has been under some pretty significant distribution since November. So the heavy volume seen in the fund today is nothing new. You can see the selling that started back in this area here in early November. Stocks bottomed, the XRT rallied along with the market, but just a lot of higher volume declines here, which weakens its technical picture. Still holding above its 200-day moving average here. Back in November, when the market hit its lows on November 16th, XRT briefly fell below its 200-day line but rallied back above it. It looks like another test of that 200-day moving average at 60.19 is likely in the cards. But XRT right now down at 97 cents, 1.6% to 61.20. So that's the retail ETF that is taking a pretty big hit today. Other high-profile growth names in the retail sector under some pressure today. Here's a look at Lululemon. Lululemon Athletica down 2.5% today to 73.86. I think I have a weekly chart of Lulu here. And to a non-discerning eye, this weekly chart may actually look like a good technical setup. Maybe you could call it a little base-on-base setup. Here was the first base that started here in August. This was in April. Started in April, and then it went for a breakout here in August. Didn't go anywhere. Formed another base here. So this entire structure that started back in April is a base-on-base pattern. But if you look at a weekly chart, and this only goes back till the fall of 2010, but what you have with Lulu is a late-stage base. You had some pretty serious sellers in the stock in 2011 starting in the summertime, but you notice it never undercut the low of a consolidation that formed in the springtime here. So it's a late stage base. The stock has already made a huge move, so I'd be wary of any breakout attempt here. So be careful with Lululemon. Late stage breakouts are more prone to failure. So interesting technical setup here. Stock is under pressure today, but weekly chart is not showing anywhere near a breakdown yet. Still has potential, but it has made a massive price move already. All right, other retailers. Michael Kors. High quality name here. I still think it's going to be a good year in 2013 for Michael Kors if this economy can continue to improve. But Michael Kors under a tremendous amount of selling pressure today. It was a good base taking shape, but this is a good reminder not to buy a stock as a base is taking shape. You wait for the base to complete, wait for a heavy volume breakout, and then that's when you make your buy. So Kors in recent weeks has been forming the right side of a base. It is back below its 50-day moving average with conviction today, down 6.4%. I mean, there's a lot of sellers in some of these growth names today. A little bit concerning, I have to say, because you see some of these stocks with leadership potential, trying to lead, but sellers keep whacking them down. That tells you that there's still a lot of money on the sidelines. If in fact real money was coming into this market, you would not see these volatile moves like this. And to me, it's potentially problematic. So Michael Kors down 6.4% today to $50.16, the last on Michael Kors. And let me just take a look at a weekly chart for Kors. I think that's going to be under Michael. Yep, there it is. And what you see with the weekly chart here is this red line here is the 40-week moving average. So I would suspect this 40-week moving average right around 47.5 could be a support level like it was back in early November. So we will see. Either way, this is just a base building stock, consolidating gains. Could be a leader going forward. Again, I think 2013 could be another great year of growth for Kors. But it needs to complete that base first. Other specialty retailers I've been following: Urban Outfitters. Stock is down 2.5% today, holding above its 50-day moving average. $38.33 last price for Urban Outfitters. This is a retailer. There's a good turnaround story going on here. Sales growth has been accelerating over the past couple of quarters. Return on equity 15%. Company has very little, if any, debt and generates a lot of cash. So pretty strong balance sheet here at Urban Outfitters. Loyal customer base, technically strong, but some of these growth names all of a sudden after today, not seeing tons of volume in the market, but sellers are having their way at least today in a low volume market environment. And finally, shares of Gap. Remember, it wasn't that long ago where Gap could do no wrong, and this was back in early October. Basically the month of October, sellers started coming into the stock. Look at Gap today. Takes out its 200-day moving average, down 2.9% to 30.45. So ugly day for retailers weighing on stocks in general. Stick with me, folks. We're headed into break number 1. More to talk about, of course, when we come back. Ken Shreve with you on Breakout Investing. We will be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing. Ken Shreve with you, 877-927-6648. We have volume on the NASDAQ today tracking about 20% higher than what we saw Monday. Monday, of course, was a half day of trading. So as it stands right now, we could come in, close to, maybe 725 million, thereabouts on the NASDAQ. NYSE volume still tracking pretty close to what we saw Monday, and Monday was a half day of trading at 286 million shares. So still a low volume market environment here. Check in on the major averages here, see what's happening. We've got a little more than 35 minutes left to go in Wednesday's session. NASDAQ Composite back near its session low, trying like heck to hold on to support here. This is you can see where the NASDAQ is. It's 50 and 200-day moving average. You had that supposed death cross, whatever that means, where the moving averages cross. I'm not really sure what. I think it's supposed to be bearish, but I've seen conflicting research on that. Either way, the support level for the NASDAQ right now is going to be in that 2985, 2990 area, and the composite right now is at 2994. So trying to hold support. If it does break through that 2984 level, certainly a visit to its December 14th intraday low of 2963 could be in the cards here. So definitely some selling pressure starting to build in the major averages here. weighed down by retailers. That's what we talked about in the first segment of the show. Retailers very, very weak today. S&P 500 down close to 5 points, 0.3% decline to 1422, and the Dow Jones Industrial Average hanging in there, fairly muted selling pressure in the Dow, trading right in the middle of its range today, down about 10.5 points, less than 0.1% to 13,128. Let's check in on the home builders here. We did get the latest look at home prices for the month of October. This is a bit of a lagging indicator from Case Shiller. The iShares Dow Jones U.S. Home Construction Index Fund. That's a mouthful. It is trading near its session lows, still holding above support here. These home builders sure have been resilient. The ITB down 12 cents today to 2076, well off its intraday high of 2109. Like I said, pretty much trading at its session low, so 2037 looks to be near-term support for the ITB. The S&P Case Shiller 20-City Composite Index fell 0.1% in October. That's sequentially from September. In September, prices were up 0.2%. Compared to a year ago, October prices are up 4.3%, so not too bad. It's like the 9th or 10th straight month of increasing home prices, so that's good news. Las Vegas had the highest monthly gain, up 2.8%. Chicago saw the largest monthly loss, falling 1.5% year over year. Phoenix, which got particularly hit hard by the housing slump, prices in Phoenix year over year were up 21.7%. So ITB under some pressure here today. Let's take a look at some of these fundamentally strong home builders. Shares of Lennar trading near its session low, down 26 cents today, 0.7% to 38.02. Looks like it's trying to flirt with another break below its 50-day moving average, still holding above the line for now. We have D.R. Horton, another high-quality home builder here. D.R. Horton, kind of a different technical look here than Lennar, fell below its 50-day moving average in November, fell significantly below its 50-day moving average in November. You can see tried to rally back above the line earlier this month, has failed, and it is down 17 cents today, 0.9% decline to 19.42. So fairly weak technical picture for DHI. Lennar, that we just looked at, not looking looking still okay as it holds above support. We also have PHM, and that is Pulte Group, another high-quality home builder. We'll see this one similar to Lennar, holding above its 50-day moving average, trading near its session low, down 1.8% today to 1782. Not seeing a whole lot of volume in the home building group today, but again, a low-volume session. And finally, Ryland Group, RYL. I mean, these four home builders, Lennar, D.R. Horton, Pulte Group, Ryland, pretty good fundamentals at all four of these companies. Good top-line growth in recent quarters. And you can see Ryland Group still holding above its 50-day moving average as well, down 29 cents, 0.8% to 35.98. When we come back, take a look at Lumber Liquidators. This is a stock that's starting to look pretty weak to me from a technical perspective. We'll take a look at LL when we come back. Breakout Investing on TFNN. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, friends, to Breakout Investing. Ken Shreve with you, 877-927-6648. Taking a look at some other headlines today at last check. Herbalife was finally starting to rally back after just a horrendously bad week last week. Shares of Herbalife up 5.8% today to $27.56. There was news today that Whitney Tilson is also short shares of Herbalife. Of course, last week, Bill Ackman from Pershing Square offered up a 342-page short case for Herbalife. He basically called the company a pyramid scheme. Now that Herbalife has is going to be holding an analyst day to answer a lot of the questions raised by Bill Ackman. I think that's coming up within the next couple of weeks or so. Don't have a specific date, but early January. So Herbalife bouncing back a little bit today. Herbalife, its business model, it's network marketing, and there's another company that has been kind of taken to the woodshed, riding Herbalife's coattails lower. You can see the same type of chart here at New Skin Enterprises. Just recently, this was it was a $46 stock. and it is now $33.28, up 23 cents today, but very rough week for the stock last week, as it became known that Bill Ackman had a big short position in Herbalife. So similar business model. I believe they're both network marketing companies. So also take a look at shares of Medifast today. That's MED on the New York Stock Exchange. Shares of Medifast taking a hit, a gap below the 50-day moving average today. Its 200-day moving average is at 23.61. Medifast is at 25.59 right now, down 12.8% on the day. News here is the weight loss company announced the resignation of its acting chief financial officer. Acting because the current CFO took over for someone else who resigned in November. So kind of revolving doors here in terms of the CFO post at Medifast. Edward Powers told the company last week that he would resign on January 4th. He took over on November 13th for CFO Brendan Connors, who also resigned. So kind of wondering why CFOs can't hold on to their jobs at Medifast. This has actually been a pretty good performer in the market, but again, $32 stock last week, now trading around $25.59. Let's take a look at shares of Facebook. There continues to be a lot of fallout regarding this, a class action lawsuit filed today about Facebook's subsidiary Instagram. Came out with new photo sharing policy that people didn't like one bit. That the inference was that photos the company may use a photograph that I put on there, for example, that they like, and they're going to use it to advertise. And a lot of people didn't like that, particularly celebrities. You could see how some of those pictures would be used. So a lot of uproar. They changed the wording a little bit here, a little bit there, but that did not stop a class action lawsuit from being filed today. Facebook down 38 cents, 1.4% to $26.55. Facebook acquired Instagram earlier this year. They paid $715 million for the photo sharing site. All right, taking a look at shares of Netflix as well. Netflix, their streaming video service on Christmas Eve went offline, and right now Netflix up 60 cents today to $90.83. But Christmas Eve there was an outage, so that the people who subscribed to the streaming video service did not have that service for a period of time. Customers in the U.S., Canada, and Latin America were affected. Netflix blamed one of Amazon's web services centers for the problem. So Amazon, not only is it getting hit by this signs of perhaps weak retail spending, not only in brick and mortar but also online, but a little bit of fallout from this Netflix problem as well. You can see Amazon really taking a hit today, down $10.24, 4% decline for Amazon, trading pretty much at its session low now. 248.38 was the last for Amazon. Breakout over 255 last week in heavy volume. All of a sudden, not looking so good. So this is a stock that this is unusual price action, to say the least, after a breakout. So sometimes in a situation like this, when you buy a technical breakout and volume is strong at the breakout, and then you see a day like this, chalk it up to abnormal price action. It looks like not a broken stock by any means, but certainly enough technical damage done today to be concerned here. So Amazon having a rough day here. Let's see, what else do we want to take a look at? MasterCard. Shares of MA down 1.7% today to $486.59. Still a strong stock, not a broken stock by any means, holding above support here, but not a stock that is buyable here. The market's overall behavior today is concerning. Yes, we're still in a low volume environment, but we've been talking in recent weeks about the fact that we had this, the market uptrend started in mid-November. We had some very mild follow-through day. the day after Thanksgiving on Black Friday. We had gains of 1.3% thereabouts in the major averages, and the folks over at Investors Business Daily thought it was good enough to call it a follow-through day. So I took the opportunity. There were some decent technical setups, and there have been some decent technical setups to work with in recent weeks. But to see Amazon fail miserably like today, and to see some of these other setups that we've went over earlier in the show, having some trouble here. The biggest challenge for this market is that there's just no buying demand out there, and when there's a lack of meaningful buying demand, it's very easy for sellers to get the upper hand. If new money is coming in from the sidelines and there are meaningful signs of accumulation in the market, you're not going to see breakouts rolling over the next day, or a day or two or three after a breakout. You're just not going to see that, because that's not what happens when new money when money is being put to work in the market. So a lot of growth names under pressure today. Here's a name, Regeneron Pharmaceuticals. Their key drug is Eylea, which is used to treat wet age-related macular degeneration, which is the leading cause of blindness in elderly people. Getting closer to its 50-day moving average here. Regeneron down another 1.8% today to 169.91. It will be interesting to see if it eventually finds support at that 164.50 level. This could just be a normal base forming. There has not been a lot of it's not clear to me that institutions are dumping the stock. Looks like it's just taking a little bit of a breather period here. So with that said, it looks like that 164.50 level I would expect it to hold. Salesforce.com. Taking a hit today, down, not getting killed, down $2.79, 1.7% decline to 166.56. Still holding nicely above a recent swing point here of 160. So this is an example of a recent technical breakout that continues to work. So there's no reason to be alarmed by a day of selling like today, and same with Rackspace Hosting, RAX, another recent breakout here last week. That is stock continues to trade quite well, looking very strong here. So this is the challenging part of this market. You see stocks out there like a CRM and a Rackspace that aren't, they're not doing anything alarming at all. Their technical pictures are very much intact. Still a lot of base building stocks out there too that have potential. But again, the fact of the matter is, when you're just in kind of a no man's land market where you don't have much money being put to work, the market's basically in wait and see mode, it's a very difficult environment to make profitable trades. And if you're sitting on some stocks that aren't doing what you expected them to do, again, it's generally a good idea just to pay attention to capital preservation, and just let the market tells you you're wrong, take a small loss, take a step back, and again, wait for renewed signs of accumulation. I suspect we'll see that once the calendar turns, but we just need a lot more clarity on what's going on with this fiscal cliff. Again, President Obama coming back, I believe, tomorrow from Hawaii, thinks there might be a chance to get some sort of scaled down, pared down deal. But we'll see what happens. But as soon as some clarity starts coming out of Washington, that might be the catalyst to bring some more money in from the sidelines. Shares of Commvault Systems, CVLT, also taking a hit today. CVLT, Commvault Systems. There it is. Another breakout here that is still looking okay. Stock is underperforming today, down 2.4% to 69.96. Still, holding above its 50-day moving average. So this one doesn't look too bad here. And then some other stocks showing good technical action here. Do I not have that ticker symbol? GN? Oh no, it's GNRC. Generac. This company. This company was in the news when Hurricane Sandy was hitting. Daily chart here shows the stock down 10 cents to 33.39. Let's take a look at the weekly chart here, because what you have here is not too bad a technical setup here. Big gap up for the stock, you can see recently, and now trying to firm up at its 10-week moving average. So you can see it's barely holding that line, though. Its 10-week moving average is at 33.25. It is at 33.39 here. So if it bounces off that support level and there's some volume behind that bounce, that's not a bad opportunity to either nibble at a small position for the first time or to add to a current position. But it's not clear to me that this is firming up at the 10-week moving average, at least not yet. Again, standby power generators is this company's main business. They make them for residential, commercial, industrial markets. So let's also take a look at Trimble Navigation, TRMB. This is kind of the section of the show where we're talking about stocks that are holding up beautifully. Trimble Navigation, beautiful breakout recently over, I'll call it $53 a share, thereabouts, but you notice how it's just being very stubborn about giving back gains. Trimble Navigation, TRMB. On the NASDAQ, they make global laser optical positioning and navigation systems. So innovative technology here, good earnings and sales growth in recent quarters, and still really like the way Oracle is trading here. You look at a chart of Oracle, you're saying, hey, there can't be anything wrong with the broad market. Oracle trading beautifully. Big move for the stock last week on better than expected earnings, holding on to all of those gains. You can see last trading around 33.58. So Oracle still with a strong strong chart here, and also BE Aerospace, name we've talked about off and on in the past. Good move for this stock in recent weeks. Nice technical breakout recently over, what was that, about 40, breakout over 46 recently, and holding gains nicely. Maybe you get a pullback here to the 10-week moving average at 46.30 if it finds support. There's another palatable entry point for BE Aerospace, and then a whole bunch of other base building stocks out there. NCR, this is a company that they're a data service provider. They also make ATMs, but this is another base taking shape, a stock that remains under accumulation. So another stock where you look and say, a chart that looks like this, the market can't be in too bad a shape, and it's an example of a base building stock, and last trading around 25.50, very close to a 52-week high. So NCR, good base forming here, and Equinix, another data center services provider. Nice base taking shape here. We'd call this a cup with handle base, or at least a potential cup with handle base. The U-shaped structure here, and then this is the first week of a possible handle area where maybe you get a little drift down lower in price. Again, if the market gets a very favorable positive headline, a technical structure like this could yield a technical breakout, and the same could be said for CBS. Totally different company than Equinix, but CBS, ticker CBS, big television network, nice base forming here. Hasn't started forming a handle, well, actually you could call like 2 weeks ago a handle area, and then a breakout for the stock last week and holding on to gains. Either way, if you call last week a breakout, this one is definitely still within range. So CBS Radio showing good technicals as well. And then you also have LinkedIn, LNKD, working on the right side of a base, but nothing in the way of accumulation so far. So need to see more signs of professional buying in LinkedIn before we get excited about this potential emerging leader. All right, folks, final break coming up. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Check in on the markets one last time. We've got, a little more than 5 minutes left to go in Wednesday's session. NASDAQ Composite still can't get out of its own way here, trading near its session low. Looks like a little bit of selling into the close here, down a little more than 23 points, 0.8% to 29.89. 29.89. Hit an intraday low today of 29.83. The 50-day moving average is at 29.84. So the NASDAQ Composite is definitely flirting with a break below support levels here. S&P 500 in a little better shape. It is trading in the bottom half of its range today, down a little more than 6 points, 0.4% to 1420. Its 50-day moving average is at 1413, and the Dow Jones Industrial Average, it is down almost 24 points, almost 0.2% decline to 13,115. 50-day moving average here, 13,083. So what do you got? About another 30 points to go before the Dow pays a visit to its 50-day moving average. I mentioned volume. Monday was a half day of trading. So wouldn't be surprised to see volume pick up from Monday's level. But on the NASDAQ, that is the case. Looks like it's about 20% higher on the NASDAQ. That will likely bring us in over 700 million shares on the day. But I'll tell you what, that's still very light considering that the NASDAQ typically trades about, 1.6, 1.7 billion. The volume on the New York Stock Exchange on Monday, half session, 286 million shares. We're tracking very close to that today. So, folks, I also wanted to let you know that I normally publish my Ultimate Growth Stocks newsletter on Tuesday, but since Tuesday was Christmas Day, I did publish it today with an updated watch list, long and short ideas. The model portfolio is currently long 3 positions. It is short 1 position. And if you want to check out 30 days free of Ultimate Growth Stocks, you can do that right on the homepage of TFNN.com. Just click on the Newsletters tab and then Investment Newsletters. Check out 30 days free. So you get extensive update, weekly update every Tuesday, and then email buy and sell alerts in between that are also posted at TFNN.com. And just get a good idea of how I maneuver this tricky market lately. You know, when we were talking about the housing starts, I told you I was going to mention Lumber Liquidators. This is a stock that's looking vulnerable. I forgot to do it, so let's do it now. It has been basing consolidating gains since early November. Fairly shallow pullback up to this point, but notice how it is starting to live underneath this 50-day moving average for about 3 weeks or so. It'll be interesting to see if this 50-day line eventually turns into resistance, because if that happens, that could result in lower prices ahead. And Lumber Liquidators has been a huge market winner in recent months. So that stock looking a little bit vulnerable. Other names where sellers are completely in control at this point: Under Armour looking very weak here, down $1.58 today, 3.2% decline to $47.67. Resistance at the 50-day moving average. It is now below its 200-day line, and a nasty reversal in the stock today after hitting an intraday high of 50.10, last trading at 47.67. And Alexion Pharmaceuticals. We'll end on that. Another bearish chart here. You can see initial resistance at the 50-day moving average. This one's looking very tired as well. Shares of Alexion down 1.8% today to 93.69. Looking more and more like a short here. Coming up next, the Tom O'Brien Show. I'll see you back here tomorrow, 3 o'clock Eastern, for another edition of Breakout Investing.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.